Oh,
You've been
I've
around.
been,
Are you
yeah.
sure? Are you following the training?
I'm literally not following the training because I don't know why I'm so busy, but I want to be serious now, so I don't know how to get to be serious.
You don't know how to get to be serious. Okay, don't worry. I'll guide you. What you would
All
do
right.
is, yeah, we already have this session. Almost this is the fifth session we have handled this training. So you have to go back to the session 1, 2, 3, just on your spare time, maybe throughout this week, and just listen to the videos, go through the trainings so that you can match up where we are. We've actually done so far and fantastic this year, and this particular Forex Foundation session for this particular year. So don't miss out. I'm telling you, the value you are given here, if you were to pay for it, you're going to pay nothing less than maybe $500 to $1,000. So
And
please, yeah, take this serious. Let me say something. Um, there are only two industries that actually make people very, very, very successful in life. When I mean very successful, I mean there's no limit to how much you could make or how wealthy you could be. Is one, and I think that one is very common and it's more popular now because everybody has seen it that it's working. The real estate industry, the forex industry, which is also in collaboration with the crypto space, where we have the blockchain and Web3 and all of the stuff. The tech also is the third, I think. So after the real estate, the forex, Web3, sorry, not Web3, the tech industry, those are the new direction or dimension where things are going, where you can actually venture into, and make money. And let me say the truth. In all of this industry, if you don't learn how to, you're not going to succeed. Let's say you are becoming a real estate agent now. You're not going to sit in your house and make deals. You go out to field work. You look for properties. You're going to do work, collaborate, talk to people in your field. I mean, learn from experts. And it might take you 6 months, 1 year to even seal a deal that could make you $1 million. Do you understand? But then it's all a process. If you learn through it, you have potentials. Now you have a skill. You have an ecosystem that you can leverage on and make money. It's the same thing that happens in the tech industry. If you say you want to become a developer now, or you want to become analyst, what do they call it? Data analyst and you know project manager, or the other stuff that you want to do. You're not going to do it in one week. It's not possible 1 week. You cannot do data analysis in 1 week. I have a friend that studied data analysis. From data analysis went on to study Python. You know, it takes time to get these skills. But funny enough, when it comes to forex, I mean, if you invest enough time, you can even accelerate your success rate. Like, I mean, it could be faster because you are the boss. You owe yourself. You're the beginning and start making deals for you to make money, like in real estate. You don't really need a third party if you have capital, right? And then for tech, you have to maybe get one gig, one project, get foreign companies or maybe clients to start giving you a job to do for you to be able to, at the end of the day, you make money. But in forex, all you need is your skill. Know how it works. Have a strategy. Then start practicing. If you practice in 3 months, if I tell you if you practice trading in 3 months without being out of the market, whether you're making profit or you're not making profit, you understand that your intelligence, your skill set, your edge is going to grow from 1 to 10 to 15 to 20, and you now have 80. If you have an 80 edge in forex trading, you become very profitable for a long term. So don't take this as something you just want to do a roadside walk and then you just jump in and jump out. I'm a professional trader. As a matter of fact, I've been trading for half a decade now. Precisely, this should be my 6th year of trading. And I never had this opportunity like you guys are having. Nobody ever, I paid money to learn how to trade. As a matter of fact, it was my friend, but I had to pay him. And I had a job as a then where I was working in a company where I have to work from 7 in the morning and close 6 in the evening. And then sometimes I have to work overtime. So the overtime is going to be like from 7 p.m. to 10 p.m. And at least I would do at least 3 overtimes in a week, including Sundays, Saturdays, and Sundays. One hour, 30 minutes break within the day. I was working during that time. Then I have to attend my classes every 8 o'clock. And it wasn't even a presentation like this. You see no pictures. It was just WhatsApp messages. No Telegram, no visual, no audio. You just have to go back and practice what you've been told to do, and you paid a lot of money to do that. So you guys are very, very privileged to have video content that are consistent and structural, that is guiding you through. And we are providing signals, even free, everything free. Guys, take advantage of this. In 2026, we might not be doing this anymore, hopefully. So let's the journey began. So let's continue from where we stopped on our last classes. So if you're just joining us, this is your first day of the class, please note that we are doing a continuation. This is the 5th time we have handled this training. So after now, some things you may not really catch up, but after now, you have to go back to start the training from the very first section. So we had the recordings are available on our YouTube, so you just go back and just play it 1 or 2 times to have an understanding. You'll be able to catch us up. And then if you're already a professional trader, or maybe you're already an advanced student, you're just joining us for the first time, you are free to stay on the call. We are going to come to something technical that is going to help you understand the market better soon enough. So let's get started, guys. So our last training, we stopped at trading plan, and we discussed some important elements under trading plans. We did some of those, so we're going to continue from where we stopped. So one of those things we talked about was trading session, how it affects your market decision making, in terms of looking at volume, volatility, time that you have to add into your trading pay and all of that. And so I think the last slide that we were on was this: how many positions will you have to open up at a given time? So this criteria is what makes up your trading strategy. I think I mentioned something about entry strategy and exit strategy. So for entry strategy, you want to know how you want to trade, how you want to manage your trade. Exit strategy, you want to know how do you plan to close your trade. Either in profit extent, do you want to close your profit, or to what extent do you want to close your losses? I think I also mentioned something about monetary value. Monetary value is that you should be able to have a figure of dollar you want to make trading a certain pay. I mean, you should do it consistently, that you should understand that, okay, if I trade micro lot, if I'm 20 pips in profit, which is likely maybe equivalent to like maybe $20 or so, I should be able to take off my profit. So I told you personally, I trade between 10 to 20 pips. If I see 10 to 20 pips of profit, I'm considering securing partially. I want to secure partially. In rare cases that I have up to 50, 100 pips catch trade, because I understand the different blocks where the market can turn, and I don't like seeing retracement. I'm telling you, because this is trading is going to make you reflect. In my personality traits, I don't like seeing much retracement on my positions. So I just need 10 pips move, 20 pips impulsive move, and I'm off the market. The rest of the move can continue. I don't really care about that one. I care about the one that I'm in and I'm out. So this thing is gonna, form part of your trading strategy in terms of looking at how many pips you want to get, how many positions you want to hold. In the case of positions, how many positions? I usually consider 4 positions for myself. The first 2 positions, it's okay. But the moment I exit 3rd positions, 3 or 4 positions, I am not comfortable in that positions anymore. It means that trade has been so bad. In most cases, I'm going to have just 2 positions. But if I'm scalping, I talk about the types of traders, which is scalpers, swing traders, position traders, and day traders. So if I scalp usually when I'm trading like BTC gold, because those pairs are volatile, they can quickly give you money. So I want to trade the lower time frame and just make some profit and come out. But if I'm trading something like GBP, Euro GBP, USD JPY, maybe Euro USD, I can swing. I can do like intraday trades and all of that. Leave the position for maybe 1 or 2 days until price goes to either profit or goes to negative. But I'm trading BTC and gold, maybe Nasdaq and any other indices. I do most of scalping. So what I do Sorry guys, network is just trying to mess us up right now. Just 1 minute, let me 1 minute, let me get the screen share back. All right. Sorry about that, guys. So I was saying, anything more than 4 positions on scalping trades, I'm not comfortable anymore. Anything more than 2 positions or 3 positions on any intraday trades, it's not comfortable. So this program me in a way that I have to make me understand where things are not going right in my trades. So it helped me more incorporate that into your trading plan, right? How will you keep records of your trading? Very, very important. Very, very important. If you notice in our community, we always have screenshots. Yeah. It's part of taking trade history, track records of trading. So keeping records of your trading is very important. You have to journal your trades. Journal your trades, the ones that make you most profit, the pays that make you more money, the market that also make you more money or make you become profitable in terms of if you have 10 sales trades and you always make money when you sell the market or a particular pay, you take notice of that. Or maybe your strategy is very good in capturing trades that are sales buyers. If you're good in buying, and then each time you buy you make more money when you find buy setups and then you buy, you could take note, because that is how you're going to realize which areas you have advantage over in the market. So when you journal your trades, it helps you to improve. Come back and look at it. Then another thing is track records. So what I mean by track record is, in this industry, people don't believe anybody. I don't believe you. If you say you're a trader and you're a profitable trader, I don't believe you until I can see your track record. I don't know if you understand what I mean. No matter how good looking you are, how rich you are, whatever case it may be, I want to see your consistency. I want to see your 1 month track record. I want to see your 2 months track record. I want to see your 3 months track record. I want to see your year portfolio track record, how consistent you are. So if this is to advantage for traders that probably might be looking for fundings later on in their career, or you're looking for investors later on in your career. You don't come up and just be talking, oh, last month I made this amount of money, last month I made this amount of money. Show us where your money is, show us where the track records are. So you learn about how to journal your trades, keep a track record, even if it's a demo account or small life account. Make sure you trade your account consistently, that you can show proof of work. You know, that's how you create you create credibility in the industry. So as a community, we have track records of all of our profit that we're posting. We don't just post profit that we are not making, you know. So if you ask for us, you'll see it's in public domain. And again, that has to do with trade recordings and track record keeping. Okay, so how do you monitor? I've already explained this. One of these ways for you to monitor the trade, you have to know that either you're going to use stop orders. I explain what stop orders are. Either you're going to use stop orders, or you're going to use set your TPs and your SLs, you know, and all of that is how you're going to monitor. Are you going to be monitoring your trade every 1 hour, looking at your chart, or are you going to be looking at every 5 minutes, or are you just going to babysit on your chart, just looking at what the market is doing throughout the day? So you think about how you're going to be monitoring your trade performance when you're trading, and that's gonna, you know, help you have a stable mind and stable emotions, right? Um, so confirmation checklist. So I slightly mentioned something about this confirmation checklist the last time, that all of these things is gonna form your confirmation checklist, especially in the strategy aspect. Okay, so let me explain. When you are making a confirmation checklist, what that means is you have rules of engagement. I think that military when it said uh, rules of engagement. So rules of engagement is a set of confluences that you need as a trader to be able to know either to buy or sell a currency pair. You understand? So that forms your trading strategy, incorporation of your trading plan. So this is one of the most important things you need to know. One of the most important things you need to have at the back of your mind, whether it's back of your mind or in front of your mind or the tip of your hand, whatever it is. But make sure that you know this thing as you know your name and where you're coming from. This is very important, right? So let's get to know what checklists, confirmation checklists are, or what are the criteria you should use for confirmation checklist. So it simply means what are the things you're looking out for in the market. So as a trader, what do you look out for when you're on a chart? What exactly do you look out for? You want to that's going to make you buy gold, or it's going to make you sell gold. Are you just looking at the candle movement? Oh, the candle now is going up, it's coming down. Let me just join now and take profit here, take profit here. No, if you trade like that, you don't have a strategy. You're basically gambling, and you're going to lose a lot of money with that. So when you have a confirmation checklist, um, and then you will now be able to know what to look out for on any chart. So any chart I'm on, bring synthetic indices, bring stock, bring whatever it is, bring index, bring currencies, exotic, whatever pay you could bring. I know exactly what I'm looking out for when I look at the market. I know. And then the funny thing is that this doesn't really change because the market is more likely the same, very slightly different. When you master a trading pay, you will only understand that pay. The difference might just be very slim with other instruments. So your strategy, if it's working, is going to also be working maybe like 80% of the time on any instrument. Okay, so let's look at this criteria for trading. So one of them is trending. Is the market trending? You will hear oftenly when people are saying, "Oh, it's going to be a bull run. The market is going to go bullish." Or in the crypto space, you're going to hear something like, "There's going to be a pump. There's going to be a dump in the market. Buy this coin and hold. Pump." Can you hear me? Sorry, network is just misbehaving, please. Can you hear me?
Yes, sir.
All right, sorry for that. Network is just being bad. Give me a minute. Let me try to reconnect my screen, please. One minute, guys. All right, so okay, so everyone can reconnect, please. Pay attention. Sorry about that. So I was talking about trending in the market, what it means. Uh, priorly we have discussed about market nature and trends, where we talk about sideways market, uptrend, downtrend, and all of that. But here we are talking about the criteria for trading, your confirmation checklist, what you're looking out for before you can trade. So what that means here is you want to know the direction of where the market is going, especially when it has to do with public opinion. And when it has to do with public opinion, it really works on crypto market, because it's gonna hear, oh, the bull run is coming, the market is gonna pump. This person is on this project, that person is on this project, and we are expecting the price pre-sale and price to be this, to be that, and that gives you an idea what whether to buy or to sell or to hold a certain currency. And in forex, you're going to see that same scenario, but it's going to be more evidence on your chart. So we talk about how you can define your trends, what you look out um, for a buy market, what you look out for a sell market. Basically, you're going to see swing highs, swing lows, creating higher highs and higher lows, and the other one's creating lower high and lower lows in the nature of the market. We'll talk about the trending. So you define the trend of the market. The first buy downtrend is an uptrend, and that's going to be your first interest. Okay, if the market is downtrend, what do I need to do? Is to do what? Wait for area. I mean, the area could be support, resistance, liquidity, and all of that, right? So that takes us to support and resistance. So we also have talked about how to derive support and resistance. You need at least two swing highs to be able to determine a level which is called a resistance level in the market, and you need two swing lows to be able to determine a support area in the market. So you need two swing lows to determine a level in the markets that is a support area. And I mentioned that support areas are where you find buyers, and resistance areas in the market are where you find sellers. So it simply means where people are willing to buy and where people are willing to sell. Or in the other way around, where in the case of buy market or bullish markets, you have a resistance level. It simply means levels where buyers are no more willing to buy more, but sellers are willing to sell at that price. So when we talk about supply and demand, that's going to make when the demand of when the supply is high, I mean, it's going to fall, and when the demand is high, it's going to rise. So it's a battle between the bull and the bear at this level, and some of these levels are significantly, evidently shown in the market. So people, look at these levels and be able to determine their entries for buy or sells in the market. So we'll look at this more on the charts when we are with this already. So we're just at the end of this, trying to put everything together. So we talk about long wicks. Long wicks is also a very significant market indicator, where when we talk about the candlestick formations and how candlesticks are formed, open, close, and all of that, open, high, close, and open, low, close of the candlesticks. The body and the wick also tells a trader a significant market activities. So the long wick significant rejections, where you find long wicks more than 1 or 2, 3 in a certain areas like support and resistance, that makes it a very clear to you, oh, the market is rejecting. You can hear rejections. People say, oh, price is rejecting this level, price is rejecting that level. And that is significant market indicator for you to know, I can sell off this place or I can buy off this place based on price opening and close. Creating a long wick on the candlesticks, he has to determine on which area. Is it a support or resistance? Okay, what is the bias? Is it an uptrend or a downtrend? So all of these things work together. You can see how you now form a confluences to help your decision making in trading. So trading is all about making decisions. So you need evidence, data. You need evidence, more like you're presenting yourself in the court of law. So before you take an actions, you need to gather evidence. And these are some of the things you will look at for to make up a strategy that will help you make your right decisions when you're trading. So another thing is going to be consolidation. I had explained before, when you are trading, you have 3 market structure, which is the uptrend, the downtrend, the consolidation. The consolidation is always a breathing space for markets to breathe and take a new direction. Are trading evenly, supply and demand are equal. So the market is just buying to one level, selling to one level, buying to another. And maybe this could happen for a whole day or some period of time. Before you know, you have what we call a breakout. So a breakout in one direction, it could break out in buying side, it could break out in sell side, or it could do what we call fake out. Some of these things you'll come to understand. It could fake out, maybe take stops or take liquidities, and then come back to his original direction or bias. So you take note of market consolidation. The phase you are on in the chart, is this market consolidating at this moment? What really happens after consolidation is a breakout. Okay, and it depends on where consolidations happens. Then you will now know what kind of scenario might likely happen in that aspect. In a case of, let's say, the market begins an impulsive move on the sell side, and the next thing you form a consolidation. So that consolidation can either be a significant indicator for either a continuation of the market or a reversal of the market. So consolidation speaks a lot. It can either give you insight of market continuation or market reversal, because the market can either go one way or go the other way around. So if it's not continuing, it's going to reverse to the other way around. And significantly, consolidation helps you to also know if the market is going to do what, continue in its direction or go in opposite direction. And it's always go bias for the market. Was it a trending market already? Where is it consolidating? Is it consolidating within support and resistance? Okay, the consolidation, which side you're having most rejection, which is the long wick we are talking about, and then form a strategy for you to know what the market is doing. So trend lines. So trend line is also, you're going to see things like one line this way, the other line that way, the other line this way. Is what we call trend lines. So trend lines is more like a guidelines for you to understand market bias in terms of determining market trend. So for you to have a trend line, a successful trend line, you need, excuse me, let me share my screen back. I don't know why that disconnects, please. For you to have a successful trend line, you also need two swing lows or swing high to be connected to form a trend line for you. Two swing lows and swing high to form a trend line for you. So I'm going to show you how that works shortly. All right, thank you. Sorry for that. So trend lines is also very effective. It's part of strategy where it helps you determine trends. So we have like two types of trend lines or more. One of them is diagonal. Trend line is also a diagonal support and resistance level. That's what you need to know. And remember, we talk about swing highs, swing lows, and we talk about higher highs, higher lows. So you need to be connecting those two higher highs, higher lows to determine if the market is actually trending upward. If you were in our previous classes, you will understand how this works. Price moving in direction. You want to know, is price really moving in direction? If you remember, I talk about impulsive movement and the market cycle. So when we talk about market theory, the nature theory, I mean to say, when we talk about nature theory, you want to know if price is moving in direction. So where is either impulsive correction or impulsive phase. We test. So this you can form a strategy with. For example, if price is moving in direction for me, I'm looking at the market is trending bearish, and after it's trending bearish, I'm already missed the first entry, and I came to meet up this market in the middle, maybe New York session. I didn't trade the London session. I come in the afternoon, and I'm looking at the market. It has been trending bearish since New York, since London session. So what am I going to do? I'm not going to just jump into the market just because the market is trending downward. I'm going to look out for some of these areas. Okay, its price has gotten to a support or resistance level. Is it forming rejections, long wicks? Is it forming consolidation? Is it trending? Is my trend lines connecting? Right? Price is moving in direction. Is it still moving in the direction that I'm seeing it to have been trending before? Okay, so how do I engage? How for retests? Price to retest the breakout in the case of a breakout or a previous support or resistance level, or do I just wait for a pullback? There's a way you determine pullbacks. What pullbacks means is, let's say, let me use a case of Bitcoin. Okay, so Bitcoin lately are traded up to $110,000. So trading $110,000 is very expensive for anybody to want to buy at $110,000. Okay, so you are willing to buy Bitcoin, but at least you don't want to buy at $110,000 because the price is too expensive. Your fear is, what if you bought or you buy and it drops? So, but there's people speculating that the price is going to go higher to maybe 120, 130. So how do you get into that market? That is where the concept of having a retest price or pullbacks comes out. Now, the retest price is probably going to be $100,000. That was the breakout price for this year. It broke out 100,000, and that was a very significant price. So price is likely to have retraced back to 100,000 before continuing back to 110,000 and before continuing back on the bullish run to maybe 120,000. So as for you as a trader, you want to know where is the possible area you can have a retest, or where was the breakout, where was, the volume came in for the market to have that, impulsive movement. So you wait for a retest price, which is what is also known as a pullback. So that means that the market is pulling back to its original price or a breakout price to gather momentum, to go back in continuation. So you look out for a retest price and you look out for pullbacks for entry strategies. So this alone, if you can understand this alone as a concept, this criteria is whatever strategy you're ever going to learn, understand smart money, SMC, Falcon strategy, phantom strategy, moving average strategies, price action strategy. This is actually the pure price action strategy. When we talk about price action strategy, this is one of the basics of the price action. Supply and demand. If you're trading technical fundamentals, you're still gonna apply some of these criteria to your trading. So this is more basic for you to understand. So when you go back to your chart, try to identify some of these criteria: trending, support, resistance, long week rejections, consolidation, trend line, price moving in direction, retest, and pullbacks in the market. And then you're going to start understanding how price actions actually work. We're going to be doing practical soon. We'll be explaining some of these things when we are on charts soon enough and all of that. So discover the trends, go with the flow, and look for higher time frame. This is the market. You want to look at the long term before you can come back to create a lower time frame market direction. So you look at the long term overall, which is could be daily markets, what we call top-down analysis, daily market review. You look at the bias where the market is likely to go for the whole day, and then you can come back on a lower time frame and look at lower time frame entries depending on your models for you to join the trend. So that was this literally means. Okay, so we talk about the charts. So just look at the screen now. The few things that we'll talk about is already being displayed on this chart. Let me explain some of the things here. Now look at this arrow that is here. It shows that this market has been buying from here. I will consider this place to be a support level, which is something equal to supply and demand that we talk about. So this is going to be a support level. And from the support level here, the market going up, going up, going up, going up, going up, going up. If you notice something, this market does not just go from this support level to this maybe resistance level. You can see that it went up here, come down here, it went up here, came down here, went up here, came down here, went up here, came down here, went up, came down, and all of that. This is what makes the market structure. Now, let me explain that. I've just mentioned something about pullbacks. Now, pullbacks can be one candle, it can be two candles, it can be lower time frame, higher time frame. So it depends on the time frame you are in, you'll be able to really see much more of how the market is either pulling back or retesting. So for now, you can see on this time frame, this is a weekly time frame. This chart now is a weekly time frame. So you can see where the pullback is here. After this market moved from here to this place, it pulls back, given a retest, just a pullback. It's not even a retestment, because if it was supposed to be a retestment, it's supposed to come out to this place. This entire place now is what we call consolidation. The market has been trending here. If you go to lower time frame, it will be a very big consolidation, maybe for days, because this is weekly time frame. This will be for days that the market has been ranging. So after this is a breakout of this price. So breaking out, if we're supposed to have a retestment, probably there's a retestment on a lower time frame, because this is weekly chart. You will see a retestment likely coming back to this breakout price. That's going to be like a retestment and a continuation to the upside, because he has done a breakout and coming back from a support level. If you go deeper into a lower time frame, this support level you're seeing here, you can see wicks, long candle rejections. Same thing we'll talk about, long candle rejection. So it shows you price is in the support level after a long sell, and it's consolidating for days, and it's now breaking out to direction. So your next expectation is for him to give you entry. Entry will be a pullback or a retest price. You know, some people will say in this place, some people will say discount or premium. You look for premium or discount price for you to be able to buy or sell, right? So that way, trend. This market has been trending upward, but then you're going to have pullbacks before it reaches maybe a certain price resistance for it to sell off again. Now, when the market stand here, it also have a consolidation of price here, and before it start having what we call break of market structure, and then it start coming down. So this side is an uptrend, this side is a downtrend. So the market doesn't really just go in one direction. Once it goes up, definitely it's going to come back, but you cannot really tell how far it's going to go. You cannot really tell how deep it's going to go. So your job as a trader is to be able to determine where are the possible areas you want to get in, possible price you want to get in and come out in profit without, taking long for you to just stay in the market without making money. And again, you're taking advantage of lower time frame and lower volatility and in the price moving in small price movement in actions. That's where you're taking advantage. Day-to-day price movement in minutes and hours to make profit. That's what you're capitalizing on. Otherwise, you would just have to wait. And entry and exit strategy is what's going to help you in risk management, because if you don't have a very good risk management and you don't have bigger accounts and then you just trade it anyhow without calculating some of these things, and you'll be here, even if you're right that the market will come up here and come back here, before the market will come here with your wrong risk management, you probably have lost your capital before it gets here. And eventually the market still comes back to your entry, right? So risk management then is very important. So when you understand your entry models, you'll be able to define where to enter, where to exit, where to wait, and where not to wait. So uptrend, higher highs and higher lows. That makes up an uptrend. Downtrend, lower highs and lower lows. We had explained that before. Okay. Let me see something here. Okay. So on this chart, you can see support and resistance level. I mentioned something before that for support level or resistance level, you need like 2 swing highs and swing lows to be able to determine that level. So if you look at this chart here, we have swing high here. This is a swing high. This is a swing high. This is a swing high. So 3 of these connecting together definitely make up what we call a resistance level. So resistance level is going to find that in a bullish market, and support level is going to find that on a bearish market. So also become resistant depending when the market has a breakout. So if the market have a breakout on a resistance level, that resistance level definitely going to become a support level for that price movement in the next market cycle, right? So like this one now, this is basically a support level. This is basically a support level right here. So we have a support level here where we have these swing lows, and swing lows here. And also we have extremes. So there are different levels to this. You're going to find the one that are stronger. By the one we mean stronger, we means the levels you can actually find both in lower time frame and in the higher time frame. So when you find those kind of levels connecting both in lower time frame and higher time frame, they become a strong key levels for the market to respect, right? So I think we have already talked about this long week rejections, how the candles are fall. So let's move on and see what we have next. Yeah. So looking at the long week rejections here, look at this market. You can see this is a weak rejection. These are weak rejection. Like here we have 1, 2, 3, 4, 5 week rejection. It's a very strong level. The market has tested that place many times without breaking out. It gives you that long week rejection. So it's a sign that the market wants to move in a certain direction, or it can show a weakness of market not having the willingness to go either higher in price or lower in price. A very important market price action. Okay, so if you look at this chart, you could possibly see all of that. I said something about market moving in cycle before. Typically, we will come to that when we go to live chat. This one's a screenshot. Now look at this. This is the first impulsive move. The face of the here we have a pullback, right? And here we have a retestment. This phase of the market,
excuse sir,
correction phase, is where we have a retestment. Somebody has a question. I think I've
yes sir, yes. Yeah, the screen is not changing, sir. Sorry.
Oh, the screen is not changing.
Yes, sir.
Sure, it's not your network because it's changing from my end.
Yeah, it's just show now. It's just show.
Okay, it's your network, please. Sorry about that. So everything I've discussed about the trading criteria is all here. These are some of the samples that you will see. In the live market scenario, you're going to also see all of that. So this is a sample of a consolidation area where market is unwilling to go down or unwilling to go up. And I talk about a breakout. So a breakout is after a consolidation like this, where price is going inside, choose one direction and breakouts, depending on the level the market is. But in this case, you can clearly see that this market has been bearish, starting here to sell, pull back, sell, pull back, sell, pull back, and come into this level and form a support level. So you expect one thing here, one of them will be a reversal, yes, or a continuation. But then the most possible scenario is going to be a reversal because the market has already been selling, and that could form what we call oversold areas where the market is exhausted. Sellers are willing to sell more, so the market has gone to areas where it's oversold. So in such areas where it's consolidating, it's showing you a weakness in the market that, oh, this market is getting ready to go on the opposite side. So once it has a breakout like this, a breakout is coming out from this box that you've seen here, where all the support and resistance internally is, is being used as liquidity, and a breakout, and it's going in one direction. All you need to come back to look for, you've seen a break consolidation after the trending, you've seen a breakout, the market has reversed. So you start looking for the opposite direction to take entries. So take note of that criteria. And we talk about trend lines. Trend lines, do it for a retest and probably use it for continuations too. So exactly what we'll be talking about. So look at this. I've said it before that trend lines are used as diagonal support and resistance. When we talk about diagonal support and resistance, it's simply the way the nature of the market is formed. When you talk about trending market, if the market is going upward, the market is going to form higher highs and higher lows. If the market is going downward, it's going to form lower highs and lower low. So connecting a two swing highs or two swing lows together simply means that this market, you're connecting different support and resistance level, where you have pullbacks, resistance levels, retest levels, and pullbacks. The other ones too, you're having retest level, which are the swing highs and swing lows, and then you're connecting this together, and this is showing you example of where the market is going in one direction. So now look at this. This is a very clear example. This is a swing high. This is a swing high. This is a swing low. This is a swing high. This is a swing low. These are swing highs. This is a swing low. Now, connecting this 1, 2, 3 has already given you the direction of the market. It's showing you that, oh, this market is what? It's going downward. So what that means is, at any point this market break these trend lines, as per your strategy, it could either be a fake out or it could be a breakout. Then it retests. If you look at this place, this market came back to the trend line. Okay, let me start from here. Here, he has been respecting the trend lines. Respecting the trend lines. Anyway, he touched the line, he sells. Anyway, he touches the line, he sells. But when he comes here, he touches the lines, and then he breaks out the lines. Breaking out the line, coming back to the line again. And what has happened here? He start buying up again. Now, let me explain what has happened in that place. If you remember when I said that support and resistance can also turn, support level or resistance level can always turn to be the opposite. So a resistance level can turn to be a support level. A support level can also turn to be a resistance level when it is violated. Now look at this. This trend line, like I said, is a diagonal resistance level, right? This is the trend line is a diagonal support and resistance level. So in either ways, in this case, is a resistance level because the market keeps selling, coming back to the trend line and respect it and keep falling, coming back to the trend line. Now, coming back to this trend line is a form of pullbacks or retestment. So selling, it pulls back, which is greed, and it comes back, continue to sell, pulls back again, and respects the previous resistance level and keep selling. But in this case, when it comes here at this level, if you notice, it did not sell again. Rather, it broke it. Breaking it means that it has violated this structure, which was originally a selling market, originally a bearish market. So per your strategy and per your criteria, what you should expect more is that, oh, this is a breakout from the trend line. what does your strategy say? The strategy says if the trend line is violated, it's likely that the market might be going in the opposite direction. Now, the question is, where did the trend line violate? Where did price violate the trend line? It's violating the trend line after a long selling off. So you expect that this level has probably been oversold. And so if it violates it, it's a sign of weakness of sellers in the market, and then it's a sign for you that reversal might come, right? So one of the things you go back to see on a lower time frame is after a breakout, you expect a pullback or a retracement level before you can continue to do what? Join the new direction where the market is going to create, which is a retracement. Okay, so now look at this. Here, all of here was resistance, 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 same trend line. But if you look at this other side, you're seeing support, support. What that means is that this trend line has been violated, the resistance level has been broken out, and so the resistance now turned to become a support level because the market has broken the structure. On a normal market structure, it's supposed to be creating a lower high. Instead, it created a higher high, right? This is supposed to be a okay. This particular place was supposed to be the lower high, but the market instead broke this trend line and created a higher high. This high is higher than this, and that violates the nature of the market. So the resistance level here basically has turned to become a support level, and that changed the market directions. So the next thing we want to see is the market creates a lower high and then creates a higher high structure to continue in the direction. So take note of that, guys. So looking for price to show you the sign that it wants to go in the direction you think. So whatever you think in the market, what this means is you always have to wait for the market to show you a sign. Just a simple of what we just talked about here. In normal cases, this market has been selling, but then I have to wait for the market to give me a breakout to come back and retest, create another higher highs to confirm for me that it's willing to go on the opposite direction. So that is what we're explaining right here. Always wait for market to show you a significant direction or a significant price that is going to do what to go in your direction, matter the market, because you can do otherwise. That's why we always wait for the first move, the market to give us the first move. So people say you join the market makers, where there's volume, you join that particular trend. So we'll come to that to see more. So look for retest or support and resistance level. Explain that as part of the strategy you can incorporate in your trading, and all of that higher highs. Some of this thing I've explained already. This simply is a pullback. If you can see here, this market sold here, pullback sold here, do a retest, sold, pullback. All these places you're seeing white box here are what we call pullbacks, sold. So take note of that. The same thing happens here. So the black arrow is showing you, and the white arrow is showing you worst entries. So yeah, let me explain that one more. Like I said something about pullbacks before and retestment level when we talk about that trading criteria. It's part of entry models and exit models, because in this case, this market is bearish. You don't want to buy the market. I think I explained that with Bitcoin. Okay, I said sometimes now Bitcoin has already traded like 110,000. That was the price. 110,000 is too expensive. Nobody will really want to buy it at that price. Okay, because if you buy at that price, it's going to retest or retrace or pull back on you, and you become a victim of pullback. If you took a higher risk, that pullback of maybe retracing back to 100K or maybe 90,000 or selling to 75. Personally, I'm looking at Bitcoin trading about 75,000 levels. He has to stretch 75,000 again, possibly this year, before he can go up again. I'm going to expect that bearish. Probably when I do that analysis, I might post it here, because I'm seeing that level as a very significant price level that the market has to dip back before we can see a very good momentum back upward again. But currently, the price is trading within a range. The range is 100,000, 90,000 to 110,000. That is the range that the market is trading. Now, let me explain that pullback thing again. So look at this. Let's consider this. That Bitcoin, for example, is selling from 100,000 and it's broke. What do you call it? Maybe it's now selling like 95,000. So, and if your strategy says that it's going to come down to, like what I'm saying, that it's going to come down probably to maybe 75,000, it's going to be a very good price to buy back. You don't want to sell when it's already selling at 95,000. You want to sell it when it has gone back to like maybe 100,000 again. So that's what pullback is. Now look at this price. So this sold. Now I've significantly seen that this market is turning bearish because of the break of structures that we've seen. But how do I get into this market? The best option is to get into the market when the market has given you an entry opportunity. And one of the criteria is pullbacks. So pullback means is that it's coming back to test the previous price level, which could be a support or resistance level, to continue in a direction. The same thing that we see that happens on this trend line strategy. So all of this that come back to this trend line is pullback, sell off. So at the time that is selling to this level, I'm not going to want to sell here, even though I've seen that this market has been selling. I want him to give me opportunity. So he should be able to come back again to a higher price. That way, I am more protected, because if this price from this entry point do not sell, it means that my stop loss will probably be around the previous or the recent high. Yeah, the most recent high. That is just the way it is. You could calculate better, but to start with, you want to look at the most recent high for your stop loss, and giving the price the room to, if it's going to be a fake out after a break of these trend lines or all of that. Please, who's trying to share screen? Can you take down your screen, please? Thank you. So that is what it means. Add that to your trading criteria. Let me see how far we've gone today. Okay, so I think we've gone so far. What this slide is saying is nobody really has a clear market. Let me tell you how this market works. We work with what we call strategies and edge in the market. So my strategy could give me 50% edge. If I know how to use my risk management well, then I will become successful. What that means is, if I take 100 trades and I win 50 of the time, if my edge is 50%, it means I lose 50, I win 50 trades. If I have a very good risk to reward level, then I'm going to be on profit as my net profit. So at the end of the day, no one has a crystal ball. We do not predict the market. We respond to the market, just like what I said. You want the market to give you the direction as to which buyers you should trade, right? So that's why you need to do analysis before you trade. And that's why you need to practice, so that you can have an edge. You can master and understand your trading criteria. What you need to do, you can have a confidence level that this has been happening for you almost all the time. That when you make this trade decision based on this, based on that, it's always going for profit. It's always putting you in profit. Or when you make this decision based on this, based on that, it's always making you take losses. All of these things you journal down, and it's going to form a trading criteria and a skill set for you. Proper risk management. Proper risk management, it's going to help you manage your consistency level. Now, let me explain something. Somebody said, if you know how to properly manage your risks, if you don't have a trading strategy, you'll become successful. Somebody said that. And there's no lie to it. You know why? Because there's no market that goes up that does not come down. Yeah, it might take you time. Let's say you just wake up and you buy a certain instrument. It might go up, go up, go up, go up, go up, go up. If you had used accommodate your trading account or capital, eventually that market is going to come back in form of retracement or reversal. and you either make profit or you break even. But since we are trading with what we call leverage, leverage is we are taking higher risks that is bigger than what we're supposed to in anticipation for us to take what take profit, more profit in the market, or to make more money. But it's also a double-edged sword. A double-edged sword means it's for your good and it also can be against you. So if you take a leverage, high leverage in trading, high risk, high lot size that's bigger than your account size, eventually you can make money. But what happens if you don't making money? It's going to also take money from you in a very high volume, right? So that's why proper risk management is very important. And I've always tell people when you're starting out, start small until you master what you're doing. So I have two options: demo account and live account. I don't know if you guys understand what a demo account is. Somebody was chatting us on our support recently, and I tell the person, okay, I asked the person to register on our platform, register on our broker that we are using to trade. And since the person said, okay, he has done registration, but then he stopped somewhere because he sees that he was supposed to make deposit for trading. He doesn't have the money to start trading. So there's no need to verify his account to start trading. And then I asked the person, okay, you can open a demo account and start trading. This is a new person that just come to trade. And he said he doesn't want to use demo, he doesn't want to open a demo account. After all, he's not going to withdraw the money he's going to make on the demo account. I laughed. I choked when I saw that message from our support. I'm like, yes, we encourage you to trade live accounts, but we do not encourage you not to practice. In a case of you don't have money to fund your account, open a demo account. In fact, before you even fund your live account, I encourage you to take, even if it's 1 week, 2 weeks, 1 month at least, to practice with your demo account. The difference between demo account and live account is just that demo is virtual money. When you make profit day, you cannot withdraw. When you make losses day, nothing happens to you. You see it and breathe very fine. You don't feel the pains of that loss. It's just the difference is in emotion that is in trading. That is just it. It's that in demo, you may not likely have the emotion of winning and losing, because this market works with emotions. We see a trader today, 1 minute is happy, 1 minute is not happy. He doesn't even want to talk to anybody. Because what trading will trigger all forms of emotion. That's why they said, because it has to do with money, nobody really wants to lose hard-earned money. Even if it's not a hard-earned money, once you make profit in the market, just like gambling, when you make profit from gambling, you don't want to lose that money back. If you try the second one and you lose, you want to come back and get that money back. So it has that way of triggering emotions. So if you master emotions in trading, then you can become profitable, whether with a good strategy or not, or by following somebody else. Just mastering your emotions and, not impulsively reacting to market movement and all of that, coupled with the fact that you have an edge in the market. So when I saw that message, I'm like, this is the mindset people have. They don't understand what it means for you to practice. Imagine that you are in a tech field, you are app developer, and then your first project, you want to develop the project for Mark, maybe say Mark Zuckerberg. Your first ever project, you collect millions of dollars, and then you want your first ever project. Like you see errors and in coding, and you won't even know how to troubleshoot, because you have not been practicing. You have not done all of that before. But when you are practicing, try to build small apps, try to do this and do that, and you're troubleshooting, you're going to see errors coming from left and right, code errors, syntax errors, whatever it is. You do everything and finish. Functions are not working. You go back to the codes to troubleshoot and do every other things, and then you come back. That will make you have experience in that job or in that field. So demo account is made for you to practice and have experience. And then you can go into live account. Live accounts is where you now put your real money with your experience. You now start trading your live accounts and make money, right? So, but what we've done in our community is that we allowed you to open a trading account. We guide you to do that. Open a demo account, trade with us for 1 month, depending on how often you come to trade with us in the markets. See how to make profits, see how to make losses, see how to master your risk management, then see how to master your emotion. From there, if you do it consistently and we see that you're following instructions and your account is growing, because there's no magic you will do. If you're not profitable in trading your demo, you have far lesser chances of succeeding in live accounts. Far lesser chances. Why? The demo you're even trading doesn't even have emotion and you're not even making money on it. When you trade live accounts, you will be taking trade, for example. You're not confident enough on that trade. You'll be shaking, your hand will be shaking, your mind will be shaking. Every now and then, you're going to be looking at the charts. You get. So these are things that you get to master. We are saying all of these things because we don't want to entice anybody to come to trade. Trading at the end of the day is not for everyone. You shouldn't learn to know how it works. Eventually, you want to decide to take the risk because it's risk taking. People are taking the risk, are becoming successful. And I tell people at the beginning of this meeting that 3 industries probably that will make you the most money in life. The rest is just going to make you be on the average. Maybe your salary earner, you be one of small business owner, and then you're comfortable. But if you want to think of building wealth, generational wealth, you have to take risks. And these are the 3 industries that could possibly: real estate, forex trading, in correlation with crypto and the blockchains, all of that stuff. And then you go into maybe tech. Those, go and look at the statistics, look at the people that are making the most money. They are in those industries. All right. The rest is going to make you money, make you, live well and all of that. So start now. If you don't have a demo account, please, we have video content that's going to guide you. I will drop a link after this class. You register your account, verify your account, and use your original name, use your complete name. Trading is more like you going to open a bank account with the bank. It's official thing. Don't go and use nickname because it's going to require your KYC verification. And if your name does not match, you may not be able to withdraw money. But then you'll not be able to even verify your account if your name on your credentials are not the same on your account registration. So make sure that you do that and open a demo account. This week, we'll send signals, we will trade. Last week, we made a lot of profit. I think we had just about 3 or so trades for the week. So 3 trades for the week and 3 trades were profitable. We trade that way. We don't overtrade. Okay? We wait for the best opportunities to come because patience is also part of the discipline in trading. You don't want to trade the noise in the market. You want the market to be cleared, and then you can take it to either be profit or loss. So we took about 3 trades for last week, and it has been profitable. And for the entire month of January and this February this year, we haven't taken any trade that has been in loss yet. I'm not saying that we will not take trade that will be in loss. So that day is also going to come where the market is going to do its thing. At the end of the day, maybe we'll take 1 or 2 losses. But one thing is sure, that our winning rate is higher than our losing rate. That's what I'm trying to tell you. Okay? If you follow instruction, use proper risk management, you will definitely, in a longer term, become successful. So with that saying much, I think we might have to end the class right here. We'll continue from this live and demo account from our next class so that people can go have themselves prepared against tomorrow. For those that are still working and for those that are going to be trading, look at some other stuff to do. So I'd like to appreciate everyone of you to the end of the class. I mean, you guys have done wonderful. This Forex Foundation basic is almost coming to a wrap. We'll go into something different moving forward when we come to an end of this class. So invite other people to join. And this week, please, guys, we would like to take questions from you. Let me take questions before I can make the announcement before we go. So let's say we have 5 more minutes. Anyone has a concern? Let's go, guys.
Yes, I want to ask. How
All right.
much can we start? How much capital can we start with to be profitable? Then
Okay.
perhaps someone has had an account before with After FX, like the link that you dropped. What can be done? I have After FX account already, so and I can't open another one.
All
How
right.
can
So
we go about that?
okay, that's a fantastic question. So how much first? How much you need as a capital? Now, your trading capital is going to be something that you want to determine by yourself. One is depending on your capacity, right? I encourage people to start small, where their power reach, because all fingers are not equal. That is one. And then, but one thing you have to understand that um, the market will give you more money when you have a good capital size. One, if you want to compare a case of where you're making 10% every month from trading, or you're making 20% every month from trading, if I have $1,000, you have $100, and we're trading the same thing. At the end of the month, I make 20%, same trade, same signals. At the end of the month, you make 20%, same trade, same signals. My money is going to be $200. Your money is going to be $20. So that is the difference. So I have more money to deposit and more money to trade with the risks is different with what you're going to be trading with. So you deposit what you have, and then your risk is going to also be different. We talk about risk management and lot sizes, so that determines our earnings. Okay, so I tell people, if you don't have much, I recommend you start with $100. But if you don't have up to $100, um, broker can allow you to deposit something less, which is like $20 minimum deposit. That $20, if you follow instructions in a community, you can be trading it with one position, which is 0.01, and make profit. One position per the time we drop trades, follow us instructions and all of that. But to just have a little bit of margin, you can definitely trade with around $100. But that is the lowest you can actually go. But if you want to really trade and see some profit, and very significantly monthly, if you do $500, $1,000, $2,000, $5,000, $10,000, it's gonna be good for you. That's one. So in the case of if you already have an account with Okta, in the case of that, yes, just tell the support that you already have an account with Okta, existing account with Okta. He will send you a link of instruction or set of instruction to follow to request for a change of IP for you to be under our IB platform on Okta. So it's just going to be a very simple thing to do. You will just follow a certain link, log in your form and submit. The request is going to go to Okta, and then they're going to you're going to have that change for you immediately. It's almost immediately it's being done. I hope that being understood.
Yeah, I quite understand. I quite understand what you're saying.
All
But
right.
what if someone have like $50? Can someone be profitable with $50? Like over some months, you can grow that $50 to 100%. Because I was told it's gambling to deposit or to trade with less than $100. So what if someone doesn't have up to $100? Is it possible
That
to be
that that's what I'm
profitable?
saying. It's possible. We grow personally. If you give me $20, I will trade that money and still grow. If you give me $50, I will trade that money and still grow. So it works with your expertise and how well you follow instruction. Like you're in a community, we drop signals and we tell you trade 0.01, or we trade use proper risk management, one positions, and we don't just randomly send signals. If you follow one strategy, it's possible to trade and make that money. Proper risk management, but it's gonna take you a little bit time. Like you said, within 1 month, within 1 month or so, with properly risk management, you can see 50%, 100% returns on that account. Because you don't really have that margin to take more trades. So it depends on how well you're able to manage their accounts with proper risk applications, and then you see significant growth on it. So it's anybody can grow any account, even if it's $10. People grow with that. So here we do that same. Okay. I hope you understand me. Okay, so anyone else with a question, please, so that we can do
Yes,
announcement.
yes, I do. Good evening.
All right, good evening. IT
Okay.
Jax, you're joining us for the first time, right?
No, this is my second time.
Really?
Yes.
Okay,
I'll be on
okay,
Tuesday.
okay. All right, go ahead with your question. You're welcome.
All right. So I've been following your signal, right? You said that one can trade with account of what's it called, $50 and still make profit. But then I realized that since I've not been able to calculate pips, I realized that even when you follow the signals, you still run loss because of your balance. So most time when you drop signal, you drop with the price and take profit. Or even when you do that in your account, you realize that before it even gets to take loss, a bit stop loss, your account is already wiped out completely.
Okay, okay. That is the case that I've been saying. Now, proper risk management. When you're trading accounts like $50, okay, my advice is you don't have enough margin. All you need to do is trade one position. One position. One position, don't trade more than 0.01. Okay? In the very rare cases that you will trade two entries. If you have $50, you can take two entries. That two entries is only when we call a second entry. And then 0.01 alone. So before you run, it's going to be a very worst case scenario before you can float like $10 on that 0.01. That means that market has been very bad. So 0.01 is not going to wipe your account out immediately, no matter how the volatile the market is, with the kind of signal that we sent. So what you're saying before that your account is wiped out is either you're trading 0.05. If you trade 0.05, believe me, depending on the pair, something if it's the pair like GBP USD, Europe USD, most of the major pairs, they are very volatile pair. You're likely gonna have your account wiped because 0.05, how many pips you're already gonna float like $10? It's not healthy. Even if you're trading $100, I don't ask anybody to apply that kind of risk on $100 account. I still advise you trade 0.01. At best, if you're very good, you can do 0.02. Right? So your risk management is what's going to make you determines if you're going to really, really have that success. If you follow the rules, you're going to see that now the worst case scenario is actually the people with $20. If it's people with $20, I can say that is not really, really, really healthy. I tell you the truth. Okay, but if you can manage, I think I've known two or three people in our community that funded $20. They follow the rules. They still make profit. They make withdrawal. At least they made $5. You're not going to be making much. Maybe $2, $3, $5. Over time you can go to maybe $20 more, and the account can grow significantly to like maybe $30, $40. Okay, because your account is very small. That is the only account size that is very, very, very dangerous because you cannot go lower than 0.01 in your trading. Okay, there's nothing like 0.001. You can only do 0.001 if you're doing synthetic indices. So the lower, the micro lots is the minimum you can go, and that is it. I hope you understand, Jax. Hello, Jax.
Yes, I do understand, but even with 0.01, I've been on losses.
0.01.
Yes, like that day I just told myself, okay, I was going to follow the signal and I'm not going to monitor the market. So I just set what's it called, stop loss and take profits. So I just closed the app and then I was doing all that stuff. In less than, it was even up to 20 minutes before I came back, my account was completely wiped.
I'm surprised to hear that because we haven't hit a stop loss. In fact, I think this week, none of the trade was it this week?
Yes, this week.
This week, none of our trade even get close to our stop loss. None. None really get close. So I'm surprised. None really gets to, let's say, it goes through. So most of them is just maybe between maybe 2 or 3 pips across entry price, and then we went to take profit. So I'm surprised that though. So that being said, just but did you take the same trade on maybe a demo account or so? Was it on other accounts? Was it profitable?
No, I just did on my live account.
Okay.
But I noticed that immediately after the loss, the market started
Going your direction.
going my direction. Yes, after my account was wiped.
Oh,
Oh, that's crazy.
good.
That's crazy to know. Sorry, so but let's look at that again, and probably you try to see your risk management pros in your demo accounts to know exactly where the case is from. Okay.
Thank you.
All right, Jax. All right, you're welcome. Someone else wants to say something, please.
Hello, good evening, sir.
Okay, team. All right, go ahead.
Yeah, sorry, I tried the IB link and it's over 5 days, if I'm not mistaken. I haven't gotten any confirmation message from or email from Okta,
Okay,
so
so
I don't know what to do.
but you submitted the request, right? Did you fill the form and submit the request?
Yeah, I did.
Okay, so what will happen is send us a message on WhatsApp. Then give me your registration name. Let me confirm if that has. Sometimes they may not send the message, but if it's already been active, then you don't need the message again. But if it's not there, it has not been done, um, then you have to chat their support. But again, you should be able to your dashboard. There's a notification buttons on your dashboard area that if that was approved, once you log in, it's going to tell you, oh, your request for change of IB has been successfully, something like that. Okay, so just chat us. Look into that.
Okay. Then, concerning what she just spoke about, the whole stop loss thing, I would like to know, most of the trades you give out on the inner group, what's the stop loss like? Like how many pips? Because at least to prepare our mind, like for those who probably would have a small account, so that you know whether it is there are trades that a person is willing to take because of the risks involved.
Okay, so basically, stop loss level is between 25, 20 pips.
Okay,
Yeah.
that's all right. Thank you. I
So, but
would send a
what I would say
message.
to you guys again, um, try as possible as you can. If you can afford $100, fund your accounts within that range. It's going to be helpful for you to be able to manage your trade properly. Because I will be honest with you, with $20, for example, you cannot really practice risk management. It's going to be very difficult. Like I said, you're barely going to be able to trade just one position. Okay, and that one position, let it be that your stop loss is not really that, the trade send is not really that wider stops. Okay, I'm being honest here because I've been in this business for a while now. I mean, I'm not here to take anybody's money. Rather, maybe in the coming weeks, we are going to have a plan to even be supporting traders to get their account skills. So that's all I could say. If you can have up to 100 at this point, but if you have 20, you just start and see how you can manage that.
Oh, so
Yeah. Yes, go ahead, please, Divine.
okay. So I wanted to. There's something. I wanted to speak on something Jack's complained about. So now
Okay, go ahead.
we've also received complaints that now most times Jacks, I don't know where you entered from. Now once a signal is dropped, right? All according to as I see you have said, all our trades last week were on profits. Once the signal is dropped, most times people enter from prices which are not close to the market price at the particular time which the signal was dropped. Now, like what someone complained, he was complaining that we are in profit and he's in loss. Now, where he's entering from, he's already entering from the market moved because the GBP/USD trade we took, the market moved at 70 pips. So our trade we got 1:4 on that trade, basically. So now where he was entering from like 50 pips after our initial entry. Most times our trades are at current market price. So now once you enter the group chat and you see a trade signal dropped by let's say 4:30 and they are telling you current market price, you should understand that within 4:30 to 5 p.m. markets will not stay at that particular current price, but their price is closer to that particular current price, which you can still scale in an entry. Now, at most, once it's an hour past or 2 hours past, most times market has scaled in and passed that previous price. So the bid I ask now is somewhere else. It's like let's say 100 pips or 80 pips. At that point, there's no need of entering the chart, the trade again. Why? Because you might enter the trade and you now set your SL at the SL given, but now your risks now instead of risking 30 pips, you now be risking 70 pips. So now most times the problem is from your entry. You're not entering at a good price close to the current market price, which the trade was initially taken. So you're not entering like 70 pips after the market
Okay.
has moved. So try to
All right.
avoid that.
All right. Thank you.
Okay.
I think you
Okay,
make a
great.
valid point.
Sorry, great.
Okay, go ahead, Destiny.
Yeah,
Please.
sorry, great. Yeah, so I just wanna add to what Divine just said, yeah.
Yeah.
So the whole of this week, yeah, I was unable to trade any of the traders' room signal. I'm a very busy person, so whenever the signals are being dropped, I might not be readily available, to see the signals, right? So sometimes I'll come in 5 minutes or 3 minutes after the signals will drop. Now I want to like the price Hello. Wow. Did anything happen? Can anyone hear me? Did anything happen? Can anyone hear me?
Yeah, can you hear me? Yeah, network disconnected us. Sorry.
Okay, so should I repeat myself here?
Yes, repeat yourself again. Thank you.
Okay, so just I wanted to add to what Divine just said, yeah. So I solicit that maybe when those signals are being sent, because the whole of this week I was unable to trade your signals. And it happened that most of all those signals were in profit. So I was unable to trade the signals because I'm a very busy person here. So at the time the signals were dropped, I wasn't readily available to see them. And maybe I'll come back 5 minutes after they were dropped, or 3 minutes, most of the times 5 minutes after they were dropped. And I know that the market will not remain at the same position as at then. So I could not trade them because I don't want to risk myself, expose my liquidity, you understand? So I just tend to watch and keep hope alive that okay, signals will be sent again, and whenever they're sent again, I will not see them. Yes. So I don't know if
market price, as in at the entry point. When they are dropping the signal, they should you drop the entry position, so that when we come back, and when we miss, 5 minutes after the signals were dropped, we'll come and see it, will compare if it will be comfortable for us to enter. You understand?
Okay, so yeah, I get what you're saying. So you're asking us to give us a buy and sell price. Even if we are asking an instant market execution, we are giving a signal based on instant market execution. I get your point very, very clear. I get your points very clear. Yeah, that's going to help you. You're very correct. That's going to help you to determine if you're still at a very good price to enter or not. That's fine. We'll see how to work with that. Then another thing I'll ask you to do is set your Telegram, set the group or the Signal group on alarm, especially the Signal group. So what I used to do at the time I was starting as well, I would make sure that I put music. I'll go to Telegram and select that particular group, pin it, then I'll put a different ringtone, either music or something that I know that once signal is dropped there, it's going to ring alert for me to know, oh, there's something on that. So that gave me alert as well. Okay, so that will help you. Then we'll see how to add entry price, so that when you come, you can just check if the price is still within entry, you can join the trade or not. The why we don't usually add that is because before you could type, sometimes price move, but we'll see to add that and see. Okay, is that okay?
Yeah, that's fine. Thank you. That's fine.
All right, thank you very much.
About the alarm stop for the group, for that group, I have just checked, and I cannot find any way to do that, because I just wanted to do it. I mean,
Okay, maybe
I wipe my 545
okay.
account, and I'm looking at growing it back here.
Okay, that's okay. Maybe you just try that again. I think our network has made other people to disconnect from the call. I think this is one of the longest longest training we have had since we started. Okay, they are connecting back. Poor network for today. So sorry, guys. You're being disconnected because of network. So we are going to be coming to the close of the. Something good is coming. We are progressing. So something good is coming to the community soon. Please, I'm going to ask you guys. Sorry for network disconnecting. Maybe if you go back to this recording, you will get what was said. So something good is coming to the community, especially to the new people that are coming in and joining us. Just make sure you're active. Trade with us. Even if you're not trading live account, open your account, trade demo account. Let us get to know you, because when time comes that we want to support the community members, we are not going to support people randomly. Probably it's going to be based on who is active within us. This is more like an ecosystem. We might have things that are going to benefit everybody or some persons, depending. So please, you're joining us newly, stay with us, be active with us, follow the instructions that are being given. Okay, that is the only way to learn, is to follow instruction. Then another thing is, still this week we have not really gotten any comments or review on our last classes that much. So please, there's going to be a link drop of Facebook link to support our campaign. Just tell us how this class went on today, a review of this class went on today. We're strongly going to appreciate that for those that share comments and share the content that we have on our social media space. So for today's class, we already spent a whole lot of time. If you have further questions, there's a discussion group on this Telegram. Please write your questions on the discussion group. We'll answer your queries and support you. If you have anything, our support is always 24 hours. We have people in charge of that. So please do well to reach out to us. You're highly welcome to our community. This is one of the best places you would like to be to start your journey and become a successful trader. I want to see in the end of 2025, I wanted to see us become even more successful as a community, not just me. To me, I was telling one of my team members the other day that I'm done for the year. all my targets, trading targets, all my whatever things I was gonna do this year. First quarter was my targets. I'm gonna get my plans run first quarter, and I've hit all of my goals. So I'm setting new goals for myself for the coming year, for the coming months. I've already done what I'm supposed to, So that is how it is. Create a plan, work with that plan religiously without sleeping. Like, look at the training. I've not missed any of the training session for any excuse. I'm not making an excuse that, oh, I'm supposed to be live and train people and I'm not training. So don't give room for excuses. Don't, please. That's the only way to go, guys. So the week is coming. Let's see what we can get in a week. There's something I've not talked about here again today, but I think we have already spent much time. I'm supposed to talk about asset management and copy trading, but we'll leave that for today. One of these days, we're going to have a community virtual meetup, because other ways you can make money from trading and how you can stay consistent in trading. And we're also planning for an event. So take the survey to know your city, for us to know your city that you are in. Likely we might plan out events that will bring everybody together physically, and then we do a training and do interaction and network and all of that together. So please, there's much coming in. The year is just starting. We have so many things to come in. Stay with us and get more your goals and financial goals and trading goals and career get done easily. So thank you, guys. I would like to draw the class to an end right here. So see you guys next week. Stay blessed. Good night all.